Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today's topic is going to be on GRIR. I'm going to explain in detail about what is GR, what is IR, how we are going to prepare journal entries for these two concepts. When the GR is received, IR not received, what are the entries we are supposed to post? When the IR received, GR not received, what are the journal entries we are supposed to post? And if time permits, I'll try my level best to cover how to perform the GRIR reconciliation as well. What are the important steps to be considered while performing this reconciliation? If time does not permit, probably I can take up reconciliation as a separate topic, and I'll upload a separate video to that extent. Okay? I request you to watch this video till the end. When you like the content, please like the video, subscribe to my channel, and share this video with your friends and colleagues. Okay? Without wasting much time, let me take you through the concept. Okay? Okay, guys. Let us look into the meaning of GR and IR. What do you mean by GR? GR is nothing but goods received. GR is nothing but goods received. Goods receipt. GR. What is IR? Invoice receipt. What is the importance of these two concepts in our procure to pay? See, let us say I purchased goods from one of the suppliers who is located in a different part of country, and it will take time for me, maybe 10 days or 15 days for me to receive the material. Once I purchase the material from him, it will take 10 to 15 days for me to get the material. So I placed an order. He dispatched the material. Along with that, he also couriered the invoice copy. Right? Then what will happen? I will get the invoice copy much faster than the goods, because invoice copy will come in the courier, and I will get the invoice copy much earlier than my goods. So once the invoice is received, I can immediately start processing the invoice, right? So when I process the invoice, what will happen? In general, I debit expenditure or purchases and credit the supplier account, right? And what will happen? Immediately, maybe after, at the time of due date, whether you, received materials or not, what will happen? Since I already processed this invoice and the amount is lying as a credit balance in the supplier account, that amount will be picked up for the payment automatically and amount will be paid. But what is that we are supposed to ensure here? While making the payment, I should also make sure that whether material received or not, whether that material is received in good condition or not, whether I can go ahead and make the payment to the supplier or not, whether he prepared the invoice as per the price, as per the quantity, as per the quality norms mentioned in the PO or not. Don't you think that I need to check all these things? Obviously, I need to check, right? So, that is the reason GR plays a very major role at the time of making payment to the supplier. If the goods are not received in good condition, would you be paying that amount to supplier? No. If the goods are not as per the quality specifications mentioned in the PO, would you be interested to make the payment to the supplier? No. So, goods plays a major role while making payment to the supplier. If I don't receive full quantity, if I receive partial quantity of the goods, would you be paying full amount of invoice? No, right? So how important it is for you to look at the GR, goods receipt, while processing the invoice. So if I receive the goods and if I don't receive the invoice, that is also a problem. Because unless I receive the invoice, I cannot give credit to the supplier account. If I receive the invoice and if I do not receive the GR, I cannot make the payment to the supplier because goods are not received. What is the guarantee that I'm going to get the same goods? How can I pay the payment to the supplier unless I receive the goods? Right? So GRIR concept is very, very important. So that is the reason when the goods received and IR not received, what are the entries you are supposed to post? When the IR received and goods not received, what are the entries you are supposed to post? These entries are very, very important and you need to understand with the concept so that you will never forget these journal entries. You know what will happen? These journal entries basically will be taken care by SAP at the back end. When you process the invoice, journal entry will be posted at the backend. When you update the GR against the PO, automatically the journal entry will be posted by the SAP at backend. That is the reason what is happening today. The invoice processing agents, they do not know what are the entries the systems are being posted at backend. But you should know as an processing agent, you should know what entry system is posting at backend. So that is the reason I thought of bringing this concept to all of you. That is one. Second thing is when you go for an interview, let us say if somebody asks, do you know what is journal entry you post when the GR received and IR not received? You can't blabber. And you can't tell them that, no, that will be taken care by my SAP. I don't know what entry system will be posted. I know how to process the invoice. That's not a right answer, right? You're not supposed to give that kind of answer. So this concept is very, very important. Okay, let me explain the journal entries first. First concept is what? Goods received, but invoice not received. I received the goods. So as and when the goods are received, either stores department or the requisitioner of the goods will go to the respective software. There will be a PO. Against that PO, he go there and update how many goods or how much quantity of the goods he received will be updated against the PO. There will be a PO in the system. PO number will be there. Against PO number, there will be a GR field. This will be PO number. Against this PO, he will go and update the quantity here. Okay, 10 quantity received or 20 quantity received. He will update the GR here. Right? So as and when the GR received, that will be updated against the PO. This is the quantity we received. As soon as you update this quantity, what system does at backend is it will debit expenditure account. Why expenditure account? Because when we purchase the goods, goods will come to us, right? When we purchase, only the goods will come to us, right? So purchases is an expenditure. All expenses and losses are to be debited. So expenditure has to be debited. Then who provided those goods to us? Supplier. So supplier is the giver. Supplier is the giver. Supplier comes under personal account. What is the rule against a personal account? Debit the receiver, credit the giver. Here supplier is the giver. So I need to credit supplier account. But why am I creating GRIR account? GRIR account I am crediting because I did not receive the invoice. That is the concept here. I received goods, but I did not receive the invoice copy. If I do not receive the invoice copy, I will not credit to supplier account. I will credit to GRIR account till such time I get the invoice copy and process. Clear? So, expenditure account, why am I debiting? Since the GR is received, it is an expenditure. So, I'm debiting as per nominal account principle. I'm debiting expenditure. Why am I creating GRIR account? Big instead of supplier account? I did not receive the invoice. If I do not receive the invoice copy, I cannot credit supplier account because I need to see whether the supplier account is already available or not, who is the supplier, what is his billing address, what is his bank details, whether bank details are updated correctly or not, billing details are updated correctly or not. All these factors I need to look into it, and then only I can process the invoice. If I don't even receive the invoice copy, how do I know what is the billing address? How do I know what is his bank details provided on the invoice copy? What is that currency agreed? What is that currency mentioned in the invoice copy? There are many factors we need to look at once we receive the invoice copy. Since here invoice copy is not received, I don't even know those details. If I don't even know those details, I cannot credit to supplier account. Hence, I am crediting to GRIR account. You know why I'm explaining in detail here, guys? They will ask you, what is, in tomorrow if you go to an interview, they will ask you, why are you creating GRIR account without creating supplier account? That question might come. Then you need to say, I cannot credit supplier account because I didn't receive the invoice copy. So what? Yes, if I don't receive the supplier copy, how do I know what is the quantity he mentioned in the invoice copy? What is the price he mentioned on the invoice copy? What are the bank details he mentioned on the invoice copy? What is the billing address he mentioned on the invoice copy? Whether the freight charges are included or excluded, how do I know? Without even knowing all these things, how can I create a supplier account? I cannot create a supplier account. Hence, I am time being creating this to GRIR account. That should be your answer in our interviews. Say, this is the reason I am giving credit to GRIR account. Right? You did that. This entry is done now. Now, what will happen? You updated the GR and waiting for invoice to come. You agree with me? You updated the GR and waiting for invoice to come. So now, let us say after 10 days, you received the invoice. Once you receive the invoice, you will start processing. What do you do once I receive the invoice? Once I receive the invoice, I go and check billing address. I go and check bank details. I go and check price. I go and check the quantity, right? Vendor, supplier name, supplier code, currency. These are all important fields one has to check while processing the invoice, right? So you need to check all these fields and start processing the invoice. Let us assume that all the fields are correct and everything is matching as per the PO and the goods received. So you can go ahead and process that invoice in our books of accounts. How can you process that invoice? You need to, once the invoice is received, generally what will happen? We used to debit purchases or we used to debit expenditure account, right? But why am I debiting GRIR account? The reason is previously when the GR is updated, I already debited expenditure account. So here I should not debit expenditure account once again. Hence, this GRIR is a temporarily credit given previously because I was waiting for the invoice, right? So that GRIR account I need to nullify by debiting GRIR account and crediting supplier account. Why I created supplier account here? Supplier is the giver. He is a personal account. So supplier account, debit the receiver and credit the giver is applicable. So supplier account I created. So net you see in these four what will happen? GRIR got cancelled. What is left? Expenditure account debit and supplier account credit. Simple. So goods received but invoice not received. These are the two important entries you are supposed to post, and what should be the reason behind posting this each debit and credit I explained. I hope you are clear on this concept. Right? Right. Let me move on to invoice received but GR not received cases. In this case, what happened? He dispatched the goods. He also dispatched invoice copy in the courier. I received invoice much earlier than my goods. Immediately I received, in a day or two I received. But goods will take maybe another 10 days or 15 days for me to receive. So what do I do when the invoice is received? I'm supposed to process immediately. So I started processing. How can I process invoice account now? I know the supplier details. I know the supplier bank account. All the information is available now. So what do? I will not debit expenditure account. Why I am not debiting expenditure account? Here what did I say? When the GR is received, since it is purchased, you know that GR is received, so you debited expenditure account. Because goods received. Goods received, I am treating, yeah, goods received because I spent. That is an expenditure. Here, goods not received. Since goods not received, you are not supposed to debit to expenditure account because it is not at, considered as an expenditure because goods are not received. So what you are supposed to do? Instead of debiting expenditure account, you need to debit GRIR account. Instead of expenditure account, what you are supposed to do? You are supposed to debit GRIR account. Clear? Now, then since invoice is received, you know the supplier details, you know the quantity, you know the price, you know the billing address, you know the bank details. All these things can be compared with the PO. When all these things can be compared with the PO, as long as they are matching with the PO, you can go ahead and credit to supplier account. You don't require to wait for goods to come to credit to supplier account because you received the invoice copy. So GRIR account debit and supplier account credit should be the entry when the invoice received and GR not received. Are you clear? You have to be very careful in understanding how I am explaining here. Why GR is debited, why supplier account is created. That concept is very important. Without knowing the background of it, it is very difficult for you to remember the journal entry. I am telling you. And it is not an easy to face such an interviews if you don't know the concept behind it. Right? Then when GR is received. Now invoice already received. After 10 days, you received the GR as well. So as soon as you receive the GR, what do? There will be a PO number here, and there will be a GR against this PO. What do? Against this PO, we go and update the GR. As and when the GR is updated, we need to, this entry will be posted by the system at the back end. What entry system will post? Once the GR is updated, it will debit expenditure account and it will credit GRIR account. Why expenditure account is debited again? I explained here. Why expenditure account is debited? When the GR is updated, why? That means what? I received goods. Why should I receive goods? I received goods because I paid, I spent, or I know this is an expenditure. So I am debiting expenditure account. Goods are received because I purchased it. It is an expenditure. Purchases is an expenditure. So that is the reason I am debiting expenditure account. Then why am I creating GRIR account? Here I debited GRIR account instead of expenditure account because the material is not received. Now material is received. Hence expenditure account is debited. This GR is not required now because GR is already updated. Since GR is already updated, I am cancelling the GRIR. I am creating the GRIR account. So GRIR account is created here. Now, what is the net impact? You see GR get cancelled. Then what is your net impact? Expenditure account debit and supplier account credit. This is how the journal entries are supposed to be posted when the goods received but invoice not received, when the invoice received and GR is not received. I hope this concept is clear for all of you. I think we have crossed almost 10 minutes more. I think it is almost 15 minutes. I will talk about the reconciliation in a separate video because it will take another 10-15 minutes for me to complete that video. So hence I will take that reconciliation part in a separate video. I'll explain in detail in case if these things are not matching as an accountant, what is your responsibility, how you need to do the reconciliation, and how to make sure that appropriate follow-ups have been done and this reconciliation has been completed. So that concept I'll explain in a separate video. I hope you are clear about this concept. If you like the concept, I sincerely request you to like this video, subscribe to my channel, and share this video with your friends and colleagues. Right? Thank you so much.